Hi friends, CA Damodaram Pagdala is here with a topic called Disclosure of Accounting Policies. Of course, Accounting Standard 1. According to me, this is a very important standard. But based on my teaching experience and also the industry experience, I have understood that most of the students take this standard as a very basic standard and theoretical one. That's the reason they show a lighter way of attention towards the standard. But if you take an Indian company annual report, any company, on an average, you can see 300 to 500 pages of annual report. In that annual report, below the balance sheet, after preparing the financial statements, you will find the very beginning note called significant of accounting policies. If you got a chance to go through with that note, you will come to know how important accounting standard 1. Now, let's get into the details of AS 1. You all know that preparation of financial statements involves many elements like calculations, forecasting, estimations, lot of factors involved, and also you know that most of the financial items are not accurate figure. Those and all calculated, estimated using certain methods of accounting. Those methods called accounting policies. Now, it's not that only the business company should know the financial information, but it also should communicate to all the users of the financial statements, many investors, shareholders, outside public, lenders, bankers, competitors, many investors and stakeholders involved in business information. So now it's simply preparation of financial statements and communicating to them will not serve the purpose. Companies Act governed by MCA always advise the companies to give a full information, accurate, true and fair information to the users of the financial statements. That's the reason MCA always requests ICI CA Institute to introduce accounting standards in order to bring uniformity and proper accounting information from the companies. That's the reason AS1 is introduced in order to make the company to clearly communicate to all the users of the financial statements to inform about the methods. What are the methods? How they calculated the items in the financial statements. So AS1 clearly explains the procedure how to disclose accounting policies. Now, we are going to see what do you mean by accounting policies, how to disclose these policies, and who will recommend to use a specific accounting policy. Is it a choice of the company or is somebody recommending the company to use compulsorily a specific accounting policy? Also, can a company use the same accounting policy throughout the accounting, or it can also change from one method to the other method? If change happens, can it change for any reason or there are specific reasons? And also, while selecting an accounting policy, can it select any type of accounting policy or policy should take into account certain factors? Like this, many aspects covered in AS1 disclosure of accounting policy. So before I move into the detailed discussion of the standard, my humble request, don't treat this as a simple basic standard, though it is a theoretical in nature, but this standard governs the entire accounting standards issued by the ICI. So that's the reason I told you, just go through with any of the company annual report, especially the note 1 summary of significant accounting policies, where you can find all the accounting standards disclosed there. Now let's get into this standard in detail. Now, the meaning of accounting policy is nothing but methods. You all know that for valuation or for calculation of items in the financial statements, we use methods. For example, let's take valuation of closing stock, inventory valuation. There we use few methods called FIFO, weighted average price method. Like that, we use certain methods. Also for depreciation calculation, straight line method, written down value method, production units method, mission hours method. Like this, we follow various methods. So for each item in the financial statements, there are so many accounting methods, policies are available. Now the question mark is it choice of the company to choose any policy on its own, or this accounting standard directs the company to use any specific accounting policy? Now the answer is it is the choice of the company to choose any accounting policy. So X Limited may choose FIFO method for valuation of closing stock. Y Limited can use weighted average method for valuation of closing stock. So it is a choice of the company. Now, when it is a choice, can a company select any kind of accounting policy, or the accounting policy what company choose should takes into account certain factors? That is the question now. Now, as I said earlier, it is a choice of the company to choose any accounting policy, but the accounting policy what you choose should be subject to and should include the factors which I am going to tell now. Those factors are: 1. Prudence. You all know that prudence concept, nothing but conservatism, concept of conservatism, which thinks negatively. We anticipate losses in the future. Those anticipated losses will be recorded now itself by creating provisions like that. We should not record any unrealized gains that is coming in the future. So any accounting policy you should choose should include prudence concept. The second one is called substance over form. Substance means actual, form means legal. So here, as per this substance over form, the transactions that we record in the books of accounts should be based on what is happening on actual base. So based on the actuality, we should record the transactions and not based on the legality. Nothing but form. Form is nothing but legal. So for the example, say I am running the business in a place which is on rental basis. So my business premises owner is, say, A. I got the business premises from A on rental basis. So who is the legal owner? A. But actually who is using the asset for business is me. So now here the question is, who can treat this as asset? Who can record the depreciation, repairs and maintenance to the premises? It's me. Based on the substance over form, transaction should be recorded based on the actuality, not on the legality. Next is materiality. Third factor in order to choose any accounting policy is materiality. You all know that materiality is nothing but important core elements, important values, items in the financial statements. So this concept recommends to record all those items which are very important, which will influence the decision making of the users. All those items should be recorded. No important element should be missed in reporting. That is called materiality. So it is a choice of the company to choose any accounting policy, but while selecting accounting policy, it should have three factors. One is prudence, the second one is substance over form, the third one is materiality. Now, after you selected, say for example, X Limited selected FIFO method for valuation of inventory in the year 2015. It followed the same method in 2016, 17 also. But for some reason, now X Limited decided to change its method from one to other. Now the question is, can a company change method of accounting, nothing but accounting policy, from one to another? That is the question. Very important thing. Now again, this standard clearly specifies that a company can change accounting policy from one to another at any point of time. So there is no restriction for you to follow the same accounting policy. Companies can change its accounting policy from one to another. But this standard very clearly mentions that change of accounting policy is only for the reasons mentioned below. you can't change for any reason to minimize the profits, to avoid the taxation, to mislead the information. Not for those reasons. Standard very clearly mentions the below three reasons for which you can change accounting policy from one to another. Those reasons are: one, for better preparation of financial statements. It's very simple. Any method, any policy, any techniques, concepts you use in accounting is only for one reason, is that for better preparation of financial statements. So changing from one accounting policy to another guides or helps the business to prepare in a better way financial statements. Then you can change the accounting policy. The other one is the Companies Act. All the companies in India governed, controlled by Companies Act, which is also governed by MCA, Ministry of Corporate Affairs. They keep on change the Companies Act. Lot of amendments will come. The current Companies Act that we follow is called 2013. So there are so many changes happen in the Companies Act over a period of time. So whenever there's a change in the Companies Act, the law, rules will get changed, and that makes us to change the one policy to the another policy. So because there is a change in the law, in order to comply, follow that rule, we can change from one policy to the another policy. Next, third reason is accounting standards. Accounting standards are governed on part of the Companies Act. When there is a change in the act, obviously there will be change in the accounting standards. So when there's a change in the standard, the policies, methods mentioned in the standard also will get changed, revised, updated. Certain new methods will get introduced, certain old methods will be replaced, taken out. So in order to comply with the accounting standards also, we change the policy from one to another. So this is very important thing, that you cannot change the accounting policy for any reason, only for those reasons which I mentioned: for better preparation of financial statements, to comply with the change in law, and to comply with change in accounting standards. Now, okay, so it is a choice of the company to choose any policy, but while choosing you have to take into account three factors. You have chosen one policy, but you decided now to change from one policy to another policy. Again, no restriction, you can change one policy to another policy at any point of time, subject to for certain reasons. Now, what will happen when I change from one policy to another policy? Let's explain this with an example. Say for example, initially I used FIFO method for valuation of closing stock. In the past years, I was using FIFO method for valuing the closing stock, but from now I decided to change to weighted average price method. Now I'm changing from one method to the other method. Both methods will not give the same value of the closing stock. Let's take, as per the FIFO method, old method, my value of closing stock is 50,000. But the same closing stock, if I value based on new method called weighted average price method, the closing stock is actually 60,000. So as per old method 50, as per new method 60,000. So I am following now this new method. So now I have to take the value as per the new method. As per the new method, the value is 60,000. As per old method 50,000. Now what happens as per old method? I am undervaluing the closing stock. So I have already valued and reported in the trading and P&L account my profit of rupees 10,000 underestimated. Now what I should do is I have to compare the value under both methods and find the excess or lower, over or undervaluation. That difference I should report into the profit and loss account. So the effect of change in accounting policy should be reported in the financial statements, mainly into the profit and loss account and also the balance sheet. So that is very important thing in this standard. Now, after you prepare the financial statements and communicate to the users, they find it very difficult in understanding the financial statements because of certain information not clear to them. In the absence of certain information, they tend to make their own assumptions. So users make lot of assumptions. Even the preparers of the financial statements also use lot of assumptions while preparing financial statements. The same style, the users, readers of the financial statements also make lot of assumptions. In that, this standard identified three fundamental accounting assumptions. There are three fundamental accounting assumptions, which are: one, going concern; second one, consistency; third one, accrual. Great chartered accountant. Going concern, consistency, accrual. So going concern is nothing but, you all know that we assume any business will continue in the future, unless if that business clearly inform us, communicate to us that it is going to close, curtail, wind up the business in the future. So if that information is not there, we assume the business is going to continue. Next, consistency, nothing but following the same over a period of time. Say for example, I followed FIFO method in the year 2017. If no information about what method of inventory valuation I'm using in 2018, I assume that the same method which was used in the earlier year used in the current year also. But suppose I changed actually in the year 2018 from FIFO method to a weighted average method, but still that information I am not given to the users. So what happened here? Information is absent, but still the users can assume that the company is following the same method. So if you clearly communicate to the users that company changed from FIFO to weighted average, then they don't make that assumption. So in the absence of information, users will assume that same method is followed. That's called consistency. The last one is called accrual. You all know that the transactions in the business are recorded based on two methods of accounting: cash basis, accrual basis. So if that basis of accounting, method of accounting not informed to the users, they always assume that business follows accrual basis of accounting. So as per this basis, all the expenses and income within the accounting year are recorded based on accrual basis, nothing but as and when the income and expense accrue and due, the liability to pay arises, the right to receive income arises, we will record those expenses and income, and corresponding payables, receivables also recorded. That is called accrual basis. So these all a summary of AS1 called disclosure of accounting policies. In order to understand the practical implication of this standard, I strongly recommend you people kindly find any one company annual report and go through with the annual report, especially after the financial statements, the number one note called significant of accounting policies. Then you will come to know that this standard actually brings all the standards into one single place. So this is all about AS1, though it is a theoretical and basic accounting standard, but this standard matters a lot in understanding the all other standards and also to appreciate the annual report preparation. So I just tried my level best in order to summarize the AS1. Any doubts you have, if you need notes for this, you can contact me. I can give you all my information to you. Thanks.